right now. Manishi, hi, good morning. How do you keep sane amidst all the question marks around tariff news flow, and especially with India now?
So, it's a difficult situation. India was anyway facing a situation of declining earnings estimates coupled with relatively expensive valuations, which had been driving down the market for the past 1 month. I think it peaked out somewhere around late June. And this result season hasn't been too good. It's been mixed with, some of the top tier banks doing okay, but the IT service companies or many of the other consumer companies warning about waning, demand. So that backdrop, that relatively cautious backdrop, was already there when this tariff tantrum hit. And now this has been a bigger, sentiment driver. And I think, the first impact of this would be felt, and it's already being seen in the currency market. Watch out for how the rupee does in the next few days. It would also have, therefore, an impact on the flows. India lost a little more than 2 billion US dollars in July, while the other Asian markets like Taiwan, like Korea, they actually gained handsomely. Taiwan gained about $7 billion. Korea gained a little more than $3 billion. So I think this has been a disproportionately cautious or negative impact on India in a short span of time. Um, we will have to watch out for some of the key dates going forward, like August 25th, when the negotiations begin again with the United States. Whether they're able to reach a truce over the next 2 to 3 days, it would be a moot point. We would have to watch out till the fourth quarter of this year to see if the earnings estimates bottom out and begin to recover. It's till then, I think investors would have to brace for more uncertainty and more volatility.
Okay, Manishi, so that's the take on the current market situation. But just want to understand from you in terms of the underperformance, a slight hint of underperformance that you're expecting going ahead. What is weighing as a bigger concern for you right now? Is it external pressure like tariffs, or is it the internal weakness that we're seeing in terms of the lesser FII flows we're getting, or also the fact that our earnings season has been largely mixed to inline? It's not been a very surprisingly strong quarter for us.
It's basically the micro problems rather that India is facing, and that's reflected in the relatively weaker earnings, the result season that we're seeing, and perhaps more importantly, manifest in the earnings estimates coming down. I mean, if you look at almost all sectors in India, the consensus EPS estimates have been coming down right from September last year. It's been 1 year of EPS estimate downgrades, which is actually a relatively rare situation for India. India has rarely ever faced this kind of an elongated, and a sector-wide earnings estimate downgrade, which is what the foreign investors are taking note of. This foreign investment outflows that we're seeing in July, that's a symptom. That's not the cause. It's a symptom of a relatively weaker earnings environment in India. And I think that basic feature has to be corrected before we see a revival in flows, before we see a revival in sentiment.
Interesting. So, Manishi, what's the read through from the earnings then? Where is it that you go overweight and underweight or stay put?
Right. Yeah. So if we look at the macro factors, and that will lead me to the sector preferences, um, at some point of time, monetary easing by the central bank or more money in the hands of taxpayers, the urban taxpayers, and more money in the hands of the government workers, it would have some impact on consumption. The government investment in infrastructure has already picked up. It will, at some point of time, have an impact on private sector capex as well. In fact, there are a few sectors where private sector capex is actually visible in terms of year-on-year increase. So I would think that private sector banks, which are relatively cheaper compared to many other sectors in India on a growth adjusted basis, I would say select industrials and consumer discretionaries, which fit into this narrative of some kind of revival in consumption sentiment, maybe later on in this year, and a revival in infrastructure capex that we are seeing already. I would include defense in that bucket. I would also talk about healthcare services, not so much the pharmaceuticals, which would possibly be wobbly for some time, but the domestic healthcare services, particularly hospitals and diagnostics, that would certainly fit my bill. I would also look at some of the high dividend yield plays. There are not too many to be found in India, but all across Asia, these high dividend yield plays are something that we're playing very intently. And if one can find them in India, there are a few of them that would certainly fit the bill as far as both retailers and institutional investors are concerned.
Manishi, private banks also is one of your preferred bets right now. Help us understand what's driving the bullish view over here, what's driving confidence, given that barring one or two large private sector banks, we've not seen major surprises from any of these banks on the earnings front. Do you believe the valuations are looking comfortable now? Is that why private banks have made it to your list?
Right. So if you look at the most recent earnings season, some of the large frontline banks, look at HDFC Bank or ICICI Bank, they did reasonably well. And what's really happening with these banks is over the long term, they're certainly going to gain market share over the public sector banks. That's been happening over the past 25 to 30 years, and that's a sustainable, robust story. The private sector banks also have way better technological capabilities, which is actually aiding in that market share gain process. They also have significantly better asset quality. They may be relatively more expensive compared to the public sector banks, but if one is selective, if one's able to avoid those banks which have asset quality concerns, particularly in the consumer lending sector, then it's relatively easy to select a few good banks in India, and that's how we're playing the sector.
Absolutely. Manishi, so good to have you on the show. Thanks as always, since it's all about earnings when it comes to investing.